Today on the podcast, we are on part 2 of our mini-series, and today you're going to learn everything you need to learn about improving your cash flow. Welcome to the Profit Cash Growth Podcast. This is the podcast for 6 and 7 figure business owners who are looking to grow a financially successful business. My co-host, Clare Hancott, is a finance director, chartered accountant and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. Welcome back to episode 2 of the 3-part mini-series this week, where we're going to be talking today about improving your cash flow, aren't we, Claire?
We are.
Explain, if anybody's only just tuned in to this episode, why we are where we are.
Well,
what are we doing this week?
It's the name of my business, Profit Cash Growth, and it essentially helps business owners to increase their profits, improve their cash flow and grow their business. So to celebrate our 100th episode, we're doing a mini-series. Part 1 is 5 ways to improve your profit. Part 2 is 5 ways to improve your cash flow. Part 3 is 5 ways to grow your business. So we're doing it Tuesday, Wednesday, Thursday this week. And there are top 5 ways that are relevant to businesses in 2026 based on what we think the year has got in store for everybody.
So if you've only tuned in today, I highly recommend you listen to yesterday's episode first so it all goes in order, and also so you get the maximum benefit of all 3 pillars of the mini-series.
Yeah, absolutely.
Great. Well, let's crack on and move on to improve your cash flow. So, Claire, let's frame improving your cash flow and why this is important and why this is a pillar of your business.
Yeah, look, everybody knows that businesses generally don't go bust because they don't make enough profit. They go bust because they don't have cash in the bank and they can't pay people. And that's ultimately what brings 99.9% of businesses down at the end of the day. And so cash flow is really, really important. But it's...
Quick question. If you had to put these pillars in order of importance for a business, so profits, growth and cash flow, which one would be the priority for focus?
Now, I think most people listening to this are going to expect me to say cash flow, but actually, I would say that 80 to 90% of the customers that we work with that struggle for cash flow, the reason they struggle is because they're not making enough profit. Their margins are just not high enough. The profit isn't there. And that is what is fundamentally the reason why they don't have enough cash flow in their business, because they want to take money out as a business owner, but they want to take more than the business actually makes. There are a couple of exceptions to that. There are a couple of customers that we work with where they just have a business model that is really, really difficult from a cash flow perspective, actually sort of in the property industry. And then we have another business that we work with that has just, gone on quite a rapid capital intensive growth strategy, and they've got a lot of lending in their business, and that is what is really, really troubling them because they're just simply not making enough profit to cover the lending. But really, I think the majority of businesses at this sort of like 1 million to 5 million sweet spot that we tend to deal with is because they're just not making the profits that they need.
It's interesting because actually the more I don't know why I've asked this question, I've gone down a rabbit hole here because I'm thinking aloud here that actually it depends. Like the priorities of these 3 will change as your business grows and
Absolutely.
What happens. Because I'm just sat there thinking, well, hang on a minute. The way it actually goes is growth is the most important because you've got to start by growing your business. Then you should make sure you've got the margins and your business model is right and your profit. Or do you do the profit bit first to make sure your business model is right, then go out and grow it and then look after your cash flow? But actually, once you get to a certain size, but then there's another argument that says a lot of people just say that the cash flow is the most important thing because it's the lifeblood of your business. So actually, it's hard to put them in a priority when I think about it.
The scenario
set you a difficult challenge.
The scenario that I see in the majority of instances is that the business owner, if they didn't pay themselves, they didn't take dividend and they didn't really take a salary, the business would be fine. It would pay all of its taxes. It probably wouldn't need lending to keep the lights on and things like that. It would tick itself over. The staff would get paid, suppliers would get paid. There'd always be a bit of money in the bank. Where the problem comes in is the business owner starts paying themselves. The business owner, rightly so, wants quite a significant salary. And actually what the business owner is doing is eking away at the cash that's needed to pay the tax bills. And so then the tax bill comes and the business owner's like, shit, I don't have the money there to pay my VAT bill, or I don't have the money to pay my corporation tax bill or something like that.
Yeah.
And then they're like, okay, let's get lending. And then they just end up in this vicious cycle. And it's because the profit wasn't there in the first place to pay themselves the salary that they want to pay themselves. And that's simply
or that
issue.
Or that anybody that delivers the value they deliver to their business is worth on the open market.
Yes. And don't get me wrong, like we have for a number of years now quite aggressively grown our businesses, and that means sometimes taking absolutely zilch out of them. And that's the reality of being a business owner, is that we're in this for like a longer term slice of the pie. We're not here for these quick wins and high salaries and things like that. But you need to cost yourself into your business. And so that's why I think that actually a lot of businesses start with podcast number 1 from yesterday, increasing your profits, because the vast majority of businesses struggle with cash flow because they're just simply not making the money they need to support the business owner's lifestyle.
I always think about this, and this is, my thinking's evolved a lot as I've got older and as I've done more businesses. But my thinking now is like this, is that if I'm planning or running a business for my lifestyle and my salary, the business needs to be self-sustainable and it needs to pay me a wage. If I'm building a business to sell, I'm happy not to take a wage.
Yeah, I totally agree with that.
That's just my view of it. But most people are not building a business that has the right multiple to be worth the reward at the end of it, not to take a salary throughout it. Does that make sense?
Yeah.
So therefore, you need to make sure you're able to pay yourself.
Yes.
Right. Great. And we also think that this is particularly important at the moment because obviously the world's volatile. So cash flow is really important.
Yeah, I mean, who knows what's going to happen in 2026?
Insanely uncertain times. So on one side, we've got people trying to take money off us all the time that we don't know where policy and things are going to change.
You mean the government?
Yeah.
Yeah.
But on the flip side to that, what that is creating is tons and tons of opportunity. So there's so much opportunity with businesses that are giving up, that are disappearing out of the market, where you don't know where the next really good opportunity is around the corner that you might need cash for, such as an acquisition, hard assets, investment. Maybe now's the time to market more because your biggest competitor's just gone bust and you need to double down on.
Whoa, don't cover all of our ideas, Simon.
Sorry.
Calm it. We're going nothing to talk about for the rest of the episode. This is why it's really volatile. If somebody had to say to me, how much cash flow should I keep in my business? On general, normal economic times, I would say keep 3 months of your overheads as like a buffer. But in these volatile times, I'll be saying to people, actually, at least double that, 6 months worth of cash, because you just never know what's around the corner. You never know what's around the corner that could literally sink your business overnight.
Or double your business. There's lots of opportunities out there. So we're going to talk about the ways that you can improve your cash flow so you can get to that 6 month mark, have 6 months worth of cash sitting in the business so that you're prepared for any downfalls, but you're also ready to take advantage of the upsides as well. Let's go for it. So number 1, Claire.
Number 1.
And you're giving us 5, aren't you, again?
5 ways, yeah.
Like
Number
yesterday.
1. Now, this is the easiest thing for every business owner to do, and is, I'd say, every single business that comes to us and starts working with us, this is a process that we have to put in place for them. And this is about getting control of when money goes out of your bank account. The amount of people that are paying invoices as and when they come in, or they just pay them when they get time or when somebody chases, you need a proper process around payment runs and money out of your business. So we suggest splitting your suppliers into 3 categories: end of month payments, prompt payments, and direct debits. You tag them all in 0, and essentially you got your direct debits, they're self-explanatory. You got your prompt payments. These are the people that will jump up and down if you don't pay them. So it might be, I don't know, like subcontractors, anybody like that you absolutely, it's critical that you pay them as per the terms on their invoice. Everybody else, you pay once or twice a month. So you either do a mid-month payment run or an end-of-month payment run, and you do not deviate from that. No matter how much somebody jumps up and down and says, can you pay me? No, you'll be on the next payment run.
And almost nobody does this, I feel like.
Nobody does. Big businesses are really, really good at this. And do you know what is so, if you think about how you react when a customer hasn't paid you, if a customer's late with their invoice and they haven't paid you, the issue 9 times out of 10 is you're worried that they're not going to pay you. As soon as they say to you, actually, I've approved your invoice, it's on the next payment run, the money will hit your bank account on this day. They've got certainty. And so often just that certainty that this customer isn't going to be a credit risk to you. You are going to get your money. It's just a case of it's not going to land for 10 days or so. 9 times out of 10, that's sufficient to make that supplier go away and stop bugging you.
So how do you deal with the small suppliers? I've got some like little magazine, local magazine. She like wants payment the day the invoice comes in, like instantly.
Well, something like that, that's going to be on your prompt run because she's not going to put your advert in her magazine if you haven't paid her. So something like that, you've got no choice but to pay. There are always going to be some suppliers that are critical for whatever reason. And it might not be that they might put you on stop or something like that. It could also be that you want to have a really good relationship with that supplier.
So
and
how
you
do I
actually
not deviate from the twice a month payment run in that instance?
You've got your prompt run, and they are the people
prompt.
that you are reactive to. And I'd say even with your prompt run, try and only do it once a week.
Yeah.
But you need to be very, very selective about who you put into that prompts run. And
why they're there.
Why they're there. So for some people, it might be that you've got subcontractors and you just feel quite strongly that as a business, morally, you want to pay your subcontractors every 7 days. Fine, no problem, do that. But have that active decision making, not that this is just the default that you pay people as and when they ask.
Great. Because
if you think about how much money is going out of your business every month, as a typical, if you turn over £1 million, okay, and you're probably making 20% profit margin, you've probably got you've probably got somewhere in the region of 100k going out your business every month. So if you can slow that down even by 1 or 2 weeks, that boosts your cash flow by 25, 50k just instantly like that overnight, just by getting control of when money goes out of your bank.
But moving that process is a one-off benefit though, because you can only get the benefit once.
But you've then got that money sitting there as a safety buffer.
Well, you're probably going to spend it, aren't you? Get back to where you were before.
Well, no, because what we started with at the start was we were saying 2026 was volatile. And
so
that you should be
if you
looking
want to get yourself to holding that amount, this is the way to do it quickly.
Yeah, you should be doubling your cash reserves. That's how we started this episode.
So the big benefit of somebody implementing this tomorrow is to suddenly get a cash buffer.
Yeah, all of a sudden you've got this cash buffer and you haven't done anything.
Yeah.
You haven't had to do anything significant. You just slow down money out your bank and it's in your bank for longer. So you are in control of it for longer.
Love it.
And that means that if you do need to react, you've got that cash there.
Amazing. Number two is
all around making it much easier for your customers to pay you. Because
not put your customers on direct debit. We had an argument.
Yeah, we did have an argument about this morning when we were writing this.
I'm just like, I feel like the point is push to put your customers on direct debit, and your point is offer more ways to pay. And they're both right.
Look, I think I've gone for like a broader topic of make it easier for your customers to pay you. And I just want to talk quickly about some of the tools that are out there that people might not be aware of these days. That essentially, we all know that when you remove barriers to things, it's easier for somebody to do business with you. So if you have an issue with customers paying you, make it easier for customers to pay you, and that money will flow in quicker. If you have to wait for somebody to log onto their bank, enter your bank details, do the payment run, but maybe they're out driving, so they're not going to do it till the end of the week. All of those things are adding these barriers for your customers paying you. So what are some really easy ways that we can get money in quicker from our customers? We'll put them on direct debit. We offer it to our customers. Go cardless, offer direct debit, fully integrates with Xero. It's dead easy. And as soon as you send an invoice to a customer, there's a link on it that says sign up to a direct debit.
I think this is
super easy.
Massive, because this is more about the shift of control, isn't it? You've shifted the control of the payment from the customer to you.
Yes. Another thing that is super easy now is that if you're somebody that can take payments by credit or debit card, if that's relevant for your customers, then again, so easy that you now don't even need, you used to need a card reader or something like that to do it, or a specialist website. You don't need that anymore. You can take a card payment on your iPhone now with Xero.
Yeah.
So there are some really, really easy methods that are out there. Another cool thing that Xero has started introducing as well is if you've got the payment set up with Stripe or Go Cardless, somebody like that, then when statements go out to your suppliers, there's a button on there that says pay now, and they can pay all the invoices on the statement in one go.
Yeah.
So there's loads and loads of these cool little technologies that just really help reduce that friction and make it much easier for your customer to pay you. If your customer's saying, oh, so-and-so's not in to authorise the bank payment until the end of the week, well, hang on a minute, let me get on Apron, produce a credit card link, I'll send it to you and you can log onto the website and use your card.
Yeah.
There's so many ways around it. So maybe we'll do an episode on it actually about all the different ways that you can now take payments to your customers, because the technology has really moved forward, and the more barriers you can remove to it being a point of friction that your customers have to pay you, the more likely you are to get paid quicker.
Great. So moving on to number 3.
Knowing the payment habits of your biggest customers. And this is really, really crucial, not only from like a cash flow perspective, but also just generally protecting your business in 2026. I would make a point, when I was an FD, but also in my business, is I know my top 20% of customers. I know the ones that are most critical to my business, and I know a lot about them. I make it a point to know what's going on in their business. I make it a point to keep up to date with the accounts that they're filing at Companies House. What sorts of things are they posting on LinkedIn? Are they saying they're having a hard time at the moment? Are they flying? All of those types of things that give you an idea as to how risky these customers are to your
Especially
business.
if your business is so reliant on those customers, it's important to get slightly closer to that, isn't it?
Yeah. So as a minimum, just knock up a spreadsheet and put in there what are the debtor days that these customers pay you. So that is the average amount of days it takes a customer to pay you from the point that you issue the invoice to when the money lands in the bank. Track that for your top 20% of customers.
Yeah.
Because your top 20% of customers, if these start getting slower in paying you, that's going to be a significant issue. So it's just about picking these quick wins and these big areas that really could move the dial rather than trying to focus on everybody. So put it into a spreadsheet, know the debtor days for each one and track it, make sure that that's not slowly creeping up, and also understand when they pay you. Just a simple thing.
Yeah.
Like, if they pay you on the 15th of every month and 1 month that doesn't land on the 15th, you get on the phone right away, what's going on?
Yeah. If you want to go like A star with this, like super duper process, you would end up with a rolling debtor day of every customer that tracks their movement, that flags by exception when a customer is paying outside of the ordinary, if that makes sense, wouldn't you?
Yes. And unfortunately, that's one thing that's kind of a little bit lacking in Xero, is it doesn't make it very easy to do it. When you go onto a customer account in Xero, you can actually see the number of days that they take to pay you on like the summary page. You can see that information, but it's not easy to get at. And there are other pieces of software that do make it a bit easier for you to do that. So if you've got a lot of customers and doing this manually in Xero would be too difficult, then there are definitely pieces of software out that can help.
Perfect. Moving on to number 4. I love this one.
Payment of taxes.
Yeah.
Now, the government don't really give us much of a break in life, and they seem to take. But the government are a phenomenal source of free credit, because there isn't anybody else out there that will give you 9 months to pay a bill, but yet the government seem to think that we can have 9 months to pay our tax bill and things like that.
Yeah.
So actually, this is about making sure that begrudgingly we have to pay our taxes, but it's that you're utilising every single day of free credit that you get from our government. So couple of really quick wins. Business rates. I see this time and time again that as default, councils will put you on a 10-month direct debit for your business rates. Give them a call, ask for it to be spread over 12 months. They have to support businesses with this. So 99.9% of the time, they'll agree to paying this over 12 months. Sometimes you can even say, I'm really struggling for cash this year. Can I pay this over 24 or 36 months instead? The amount of businesses that I work with that have got payment plans for business rates, and it's completely interest free.
Yep. Oh, unbelievable. I thought they charge interest on it.
No,
Wow.
They don't charge interest. Now, you've got to understand every council's different.
Yep.
So every local council will have its own policies. But yeah, loads of the business, I say loads. I've probably got 10 different businesses that I work with that have got payment plans with local councils of business rates over a number of years, and they're interest free.
Amazing. Other taxes?
Yeah. So corporation tax, VAT, PAYE, all of these. Firstly, don't pay them early. Don't think, I'm going to set that up on Friday. It's not due till Wednesday, but I'm going to pay it on Friday because then I can tick it off my list and I know it's been paid.
Well, they will give you interest on it though if you pay it early.
Well, not your regular taxes like VAT and PAYE and things like that. Corporation tax they do, but the interest rate is paltry. I'd rather just be sitting on the cash.
Yeah, I agree.
So don't pay these early. I work with one bookkeeper and they're very proud all the time that they've always paid the taxes early, and I'm thinking, but why? Like, that's absolutely bonkers that you're saying that to me.
My goodness, they're not giving us any breaks whatsoever and clubbing us around the head. Why the hell would we help them by even one day?
Exactly. So if you're up to date with all of your taxes and you don't have any cash flow issues and you don't need extra cash at the moment, then make sure that you're signed up to a direct debit on all of them. Okay, that's the quickest win that you can have, because with most of the direct debit payments, you get an additional 3 to 5 days to pay it. So you get the payment deadline, and then so for your VAT return, the payment is normally due on the 7th of the month, but HMRC give you 3 to 5 days after the direct debit, and they'll take, after the due date. I'm not explaining this very well, am I? They'll give you 3 to 5 days after the normal payment date, then they'll take the direct debit. So you get an extra 3 to 5 days of free credit from HMRC, essentially. If you do have any cash flow issues and you are struggling with paying anything, it might be that you've got the money set aside for your VAT return, but not something else. Don't pay your VAT return. Get a time to pay arrangement from HMRC. It's such cheap credit that HMRC will just charge you, I think it's 2.5% above base rate, which is so competitive when you think about what it would cost you to go and get an external loan somewhere. So it's like a no-brainer, and you can apply online for a time to pay arrangement. So it's super easy and it's normally approved instantly at a really good interest rate. if you need to pay longer than 12 months, you can call HMRC and agree a longer payment plan with them as well. Now, the only caveat I would say to that is that when you come to get like business finance and things like that, they will ask questions sometimes about whether you've had these time to pay arrangements. And sometimes that can mean that you can't get a loan or something like that. So just
be careful, yeah.
Don't be too frivolous with this, but it is a fantastic way of getting cheap credit when you need it.
Perfect. What I absolutely love about this podcast is that we pack so much value in such a short space of time. It's the only podcast that I don't have to put on 1.5%. Because that's just your normal speaking speed. It's just tremendous. It means like every time that somebody listens to a half an hour episode, they're getting like an hour's worth of value. It's tremendous. Just in case people can't keep up, we'll slow it down very slightly.
I can't. I'm just so passionate.
Just so excited about cash. Nobody's been this excited about cash flow for as long as I've known. This is why your bank balance always looks so good. Right, moving on to our final one for cash flow, number 5. Really, really simple. Literally literally no one does it because it sounds simple. It's actually quite complex to do. But if I can do it, then anyone can do it. And what's that?
Create a cash flow forecast.
Just create a cash flow forecast. I think it's daunting creating a cash flow forecast because there's so many moving parts. I think the starting point is just to take even if you start with literally 3 lines, turnover, cost, cash. Balance, like 3 lines. Just try something.
Do you know why people get overwhelmed by this? Is because they try and track every single last thing.
Yeah, and that's the problem.
The reason most people will struggle with actually where you want to put all of your effort is money in, because that's the bit that's out of your control, and that's the thing that can really take you from a good cash flow forecast to being in a lot of trouble, is when your money comes in. It's the money out that people focus on, and they'll go into Xero and they'll look at every single invoice, every single direct debit.
Just take a run rate.
You need to, exactly. Take a run rate, take a high level view of things, but also if you have implemented number 1, get control of your money going out, it's very, very easy to start seeing patterns in your business and to get that run rate. It's when you have no control of when anything's going out of your bank and, anything goes out willy-nilly, et cetera, that it's very, very difficult to do your cash flow forecast.
Very good point. That once you're at a point where you're doing 2 payment runs a month, the pattern will just completely emerge, and being able to do a cash flow forecast becomes much easier. Well, it becomes a doddle on the cost side, so then you're just focusing all your energy on the income side, trying to nail that down.
Absolutely. And, you can even go a step further with your direct debits. It's very easy to get direct debit dates moved and things like that. So there's lots of ways that you can make doing this cash flow forecast much, much easier, but also much, much more accurate.
I know people just, like business owners, just don't want to sit down and nail through these things because it's literally fucking utterly dull. But honestly, if you just sit down and do these things once, they work for you forever. It's like it's like tuning the engine of your business, isn't it? And everything else will just happen really well.
So in terms of your cash flow forecast, we always recommend keeping a rolling 13-week cash flow forecast. That's what you should be doing on a weekly basis. If you're in cash flow difficulty, you're going to be doing it on a daily basis. But whenever you're making a decision in your business about something significant that's changing, so taking on new staff, up in your marketing spend, anything like that that's going to have a significant difference on your cash flow, do a 12-month or 3-year cash flow. But otherwise, keeping a rolling 13-week cash flow, that should be something that your bookkeeper is able to do. The difficulty, 9 times out of 10, when people say to me, this cash flow forecast is a load of rubbish, it's the sales number.
Yeah.
That's the thing that generally an accounting team isn't as connected to, is what's going to happen with the sales number. So you as the business owner, the head of sales, whoever it is in your business, does need to have some input into that cash flow forecast and say, what do they think the pipeline of sales looks like?
Amazing. Great. So that's a wrap on improve your cash flow. So just summarise very quickly, high level, the five key ones. We started with get control of your money going out.
Yeah, that's all about getting some payment run processes in place. Number 2, make it frictionless for your customers to pay you. Utilise all the technologies, direct debits, card payments, all of those types of things. So it's much, much easier for your customers to pay you quicker.
Yep.
Number 3, know the payment habits of your business, your biggest customers. So that's about identifying your top 20% of customers and identifying, how frequently they pay you, what days of the month they pay you, and all those types of things. So you can quickly identify where there could be issues, but also spot opportunities to put a bit of pressure on them and try and speed up those payments. Number 4, get your free money from HMRC. So this is all about payment of all your business taxes, making sure that you're getting as much free credit from the government as possible. Yep. And number 5, create a rolling 13-week cash flow forecast.
Awesome. And that's a wrap on today's second part of the 3-part mini-series on improving your cash flow. Yesterday was increasing your profits. Today's improving your cash flow. Tomorrow, one of my favourites, we're going to talk about growing your business,
Yes.
which you would usually say is not the job of the accountant, but you really roll your sleeves and get involved in those conversations with people. So I'm really looking forward to having these conversations tomorrow about growing your business. So thank you again for joining us today for part 2 of the mini-series. Tomorrow, 6 a.m, join us for our final instalment of this week as we've gone through episodes 100, 101 and 102. And I promise you we'll just get back to normal service from next week. But I hope that this is really igniting and getting the juices flowing for you. And we'll see you again in the morning.